And this is Market Pros. This is a segment that we do now and then when we get some special people on the show. Today we have Manesh Patel. You know, for me, Ichimoku has been a mystery, and I really wanted to get somebody on the show that was an expert in it. I consider myself an expert in technical analysis and especially cycle analysis, but I have watched a lot of the work that Manesh has done, and it has been very informative to me. Manesh is a CMT, veteran institutional trader, founder of Ichimoku Trade, an educator, and works with industry professionals and students. So really has gone a lot of way in helping a lot of people understand this, and authored a book, Trading with Ichimoku Cloud. Manesh, welcome to the show.
Thank you. It's glad to be here. Thank you for the
Okay,
invitation.
glad to have you. Now, what we have is some video here. We don't have Manesh's picture, but we're going to spend some time on the charts here and really talk about it. Manesh, I've got your chart showing right now, and I want to try to clear up this mystery about Ichimoku. When we look at these things and we see clouds and lines and all kinds of things, and I know this is one of the really three main studies that traders in Japan use. Talk to us a little bit about it. Clear up the mystery on this.
Yeah, so Ichimoku in Japanese means at one glance. So the whole idea of Ichimoku is to simplify trading. What I've done here is I've shown you a simple chart where you see this cloud and then this green line. This cloud basically represents the sentiment where it shows you supply and demand. So the way you read it is that if the current price is above the cloud, then the sentiment's bullish. That means you can only trade on the bullish way. If price is below the cloud, that means sentiment is bearish. You could only trade downwards. If price is in the cloud, that means basically it's consolidating. At that point, you need to wait for the sentiment to change either to be bullish or bearish. And that's the simple notation of
Wow,
the
that
cloud
is simple.
price. All right. And the way you trade it is that you look for price to be in the cloud where it's neutral. The moment it pops outside the cloud, either above it or below it, and the sentiment changes, that's when you start looking for opportunities. And what happens here is in this example here, and you can see back in 2011, we popped out of the cloud here, which was January 2012. We popped out of the cloud and we remained above the cloud until August of 2015 when the whole China stuff happened.
So
And
we're
at that
looking at a
point-
daily chart there of the S&P 500, correct?
This is actually the weekly chart for the E-mini S&P
Oh,
500.
weekly E-mini S&P, okay.
Yep. So what happened in this scenario here is in August here, 2015, we finally closed below the cloud here where the sentiment changed from being bullish to finally being bearish. So at that point, it went bearish, and then we went back above the cloud here. So this is what we call a bleep. And the reason why that bleep was because price did not sit there and tank from this point right here due to the monthly support. There was a monthly support here. And if you like, I could quickly show you that here. And this is where it's easy to do multiple time frame analysis here. So this is a monthly time frame for the E-mini. And back in August of last year, when the China stuff started happening, we went below the cloud on the weekly, but this green line here, which represents a 26 bar support, in this case it's 26 month support, and we never closed below there at all. So you could see here, since we never closed above it, that's what caused price to come back above the weekly time frame cloud.
And
if
now
you
something
notice-
has changed.
Yeah, something's drastically changed, and you guys could see it from our outlook that we started talking about in December. What happened is that this action here in August was so drastic to a point it changed the forecast for 2016 for us, where basically we talked about where it was going to be in a bearish consolidation pattern. And now what happens is if we close at the end of this month, which it looks like right now, below this green line here, then the probabilities of us entering a bearish trend sometime in 2016 is going to be high.
Now this is interesting because when I look at that chart, I think about the things that I talk about. And one of the things that I really focus on a lot is momentum. I think momentum is ultimately the most important for longer term traders or even short term traders. So when I look at that, it looks to me like there's a reflection of momentum or loss of momentum when I see those charts. So would you say that that's similar?
It's a loss of momentum, but if you look at it from the monthly point of view, This is a loss of momentum temporarily. So even though we're moving down drastically in a huge percentage, this is still going to be a major pullback for the monthly time frame for this big entire trend going up. But this major pullback can represent 20 to 40 or 50% of a downward turn. But over a long-term period, which is a 5-year projection, this is still a major pullback, believe it or not. And until the monthly gets below the cloud, you can't really say the long-term projection is a bearish sentiment. So in
So
here,
when I look at that, is the cloud a draw? Is there any reason? Is there any way to target your trades based on that?
yep. So if we close below the green line, then what happens is we say it's a high probability of a major pullback that's going to occur. And what's going to happen is it's going to have a high probability to get to at least the top of the cloud at that point. So if we close below the green line, my statements to the outside world is going to be is that we now have a high probability of coming to this cloud, whether it be the top, middle, or the middle or bottom, it doesn't matter. But the first target is the top of the cloud.
And the price of that right now is?
If you look at it right now, you're looking about 1587. But remember, this changes month to month. And we could sit there and slowly go downwards. And maybe by November of this year, the cloud top would be around 1773.
I see. Well, that's really interesting. So the longer it takes, the higher the area of support.
Yep. And normally what will happen is you could see the same thing also in 2008, and we could show you that, is after you close below this major support, this green line support, we'll come back and test it. And so what will happen is we'll slowly come back and test this major resistance level, which is now here at roughly about 1934. And then what will happen is we'll test it, and then we'll start making a move towards the cloud.
Well, it's amazing because so much of what you're looking at right now lines up with my work, because I've been looking for a decline, first supports in the around the area of 1775, but my ultimate target is around 1600. So that's really fantastic. And I thought if they rebounded, they'd rebound up to only the low 1900s. So my work and your work are just in alignment, and that really blows me away.
Yeah, and we're looking for past patterns from 2008 to kind of repeat now. And I'll show you what I mean by that in just a moment. But if you look at it here, we closed here, and then if we retest this and then go down, and normally that happens in May or April. And let me quickly illustrate that for you. So if you look at the price action here, January of this year, we basically closed below the cloud here, right? And now we're starting to trend downwards. If you come back, and I'm just going to slowly scroll here so we can still see the view.
So you're going back to 2008?
Yep. So if you look here in 2008, we basically right here, we barely closed below the cloud in 2008. And notice one thing, we pivoted right here, which is around 1252, and then we pulled up to this green line, which is the same green line that we're looking for the markets to pull back to. It pulled back to here, and then what happens is somewhere around April, right before the sell in May and go away scenario, the market started trickling downwards, and that's where we had the downward move going forward. So if we repeat the events of 2008, then it will be similar to what happens now, is where we'll go back to that green line resistance, we'll hold it, and at that point, the journey will slowly start to come retest this low, and then to break that to eventually start a bearish trend.
So I want to be clear about one thing. You know, these are patterns, and it doesn't necessarily mean that the magnitude of the decline is going to be the same. It may be less than the 50 or 54% decline, but still the pattern is the pattern, and it is suggestive of further declines.
Yep, that's correct. And you know, we give a forecast, and then what you have to do is you have to verify it with actions from the chart week by week. So, you know, our forecast is that, you know, we're going to sit there and sometime this end of this month or beginning of week or in February, we should hit a bottom of the markets. At that point, we'll start to pull back up. We're thinking it's going to come to this resistance here at 1934 in the E-mini S&P 500 futures, and then slowly start going down after April or May to go downwards to start a bearish trend. That's our forecast at the beginning of the year. but we verify that with week-to-week price action movements on the charts by looking at the E-mini, the VIX, the bonds, treasuries, and other products too. So we support our actions and our forecast for weekly price actions.
So before we hang up on this whole conversation, there's so many people that are looking at China and specifically oil that's been driving this trade with markets coming apart with these deflationary forces. Just talk about those markets, and because they're probably the biggest influence, and how you think that lines up with the scenario.
So here's a weekly chart of the Chinese market, okay? And one thing I want to stress is when in August, when people were talking about how the Chinese market is bearish, it really wasn't. So if you look here in July of 2014, the Chinese market basically broke out at 22.55 and started this big longward trend. Then basically last June, it wasn't August, it basically topped out and started moving down. And if you notice, the movement came all the way down, and this was right here, September 28, it hit the bottom of the cloud. It hit the bottom of the cloud, and the cloud basically stopped it from going bearish. Price then followed along the cloud going upwards, and the moment it closed below the cloud here, the sentiment for the Chinese market at that point changed permanently for us to be bearish. And what happened was it held a resistance here, right at this level here, which was a resistance right here, and it never seemed to sit there. Whoops. Charting issues. Never seemed to sit there and could break this resistance level at all. And when it held it here and then slowly started making a move down, there was a high probability to retest that low. But the next level now for the Chinese market's this one. So we think now we got a high probability of the Chinese market eventually by the end of this year getting to 28.15. And at that point, it could possibly break that to come back to where it first broke and started this big upward movement here. But in actuality, if you guys look at it, it's not a bearish trend. It's just retracing the whole big movement that it went through from the very beginning.
Yeah, not a bearish trend, but tell that to the shareholders, huh?
Well, it depends on when people get in.
Yeah, right. Well, in the meantime,
so
I'm looking at
the
that.
Chinese market, and we've been short all the way to 29.90, and you could see that this week it basically got there. So we've taken profit on our ETF position for the Chinese market, and now we're just waiting for a pullback on lower time frames to go
Pull
up.
back upward.
Yep, pullback upwards to happen,
right.
and then we'll look to enter another bearish position to start going to target the 28.15 level.
Okay. Anything on oil that you can share that you think is significant? Because that's a big influence.
Yep. So on crude oil, I'll show you, this is a weekly chart too. And I'm keeping it to weekly because we want to forecast for 6 months to 1 year at least. So on the weekly here, and we've been short crude oil as soon as it closed below the cloud here. So you could see an early signal here on the weekly time frame here, which was basically back in July 28, 2014, where the sentiment changed on the weekly time frame to be bearish. And you could see after that point it tanked. Then it came back up here and then so forth. But another position to go short, and the critical point right here for crude oil was at this point right here when it touched this green line, which is at $50.35 a barrel, and this was October 5th, 2015. It got to that resistance and they would not break it at all. In fact, if you looked in the lower time frames, this resistance here in the weekly matched the lower time frame, so we call this a multiple time frame resistance value. It held that, and pretty much at that point it started to go down. And since then, we've been targeting a level of $22.50 a barrel for basically our price target for this guy. And where did we get that from? If you look at the monthly time frame and you zoom out, you could see this price action here going back between 2000 and 2003, and you could see there's a flat support line right about here. So roughly right around here, 24.19, and then if you look at it here, there's another level here around 18. So roughly around this level, between these levels, we feel like it's going to bleep, but these are levels it's going to get to. So 24.19 at least.
I had a projection level at around 28.60, and now as we speak, it's gotten under there today as we're in total free fall, down 6% on the day. So.
Yeah, and it's kind of hard to see because you're actually looking back at this consolidation pattern between 2000 and 2003. So there's a lot of minor supports where it could bounce off them, but the key levels as far as Ichimoku is concerned, the flat parts of the cloud, which represents 52 bars of support, are these levels here.
Wow, those are key levels then. Thank you. All
And
right,
those are
Manesh,
levels
fantastic stuff. So glad to have you on. I want to make sure we put that chart up that has your information on it. This is Manesh Patel, and it's ichimokutrade.com, and you can see there on his chart his contact information. So great stuff, Manesh. Love to have you on again sometime in the future.
Well, thank you for the invitation. It's greatly appreciated, and more than welcome to come back.
Great. Thanks a lot. Best to you. Take care.
Thank you.